this sort of delay from last night over into the end of the year was pretty much expected. I think whatever happens, they will have to demonstrate they've used every hour, every minute of the day to try and come to some trade resolution, even if we move to a hard Brexit. So I think from that perspective, expect these trade talks to go to the very 11th hour and maybe even beyond. I think from a market's perspective, there's quite a lot priced in as well. And as we've seen on the reaction overnight and this morning, there has been a little bit of a bounce back on the sort of likelihood of a skinnier Brexit deal rather than a hard Brexit. But if we do flip over into a hard Brexit, there will be more to come from the financial assets.
Yeah, it's interesting to watch some of the major home builders actually bounce towards the top of the charts this morning in terms of trade around Brexit. But I just want to park that conversation there for a brief moment and move on to what we're seeing out of some of the big online stocks and retailers counting down to Christmas. And it's slightly unusual events playing out in Germany about a lockdown now in the key holiday period. The whole point around having a lot of these lockdowns and tighter restrictions throughout November and early December was to allow Christmas to take place at least a little bit more like its normal form than what we've had in the past with all these restrictions across various months that, of course, threaten Christmas and New Year's. So what do you make of the short-term trade around some of these stocks, given we seem to be going back to some of those pandemic trends that we witnessed early on in March and April?
Yeah, I mean, the online retailers and the sort of the digital execution of consumption is a long-term thematic, and this is a secular trend. This will continue, and I think as we see economies trying to open up and opening up for events like Christmas and opening up their economy, they've closed down the economies by decree, and they're trying to open up their economies by decree as well. And there will be obstacles, as we've seen in Germany. And so you've seen the way the US have taken to sort of maintaining an open economy despite some of the public health issues. And you've seen the way China has really controlled and commanded their economy and their sort of social movement through this. Europe has struggled with this second wave a lot more. And so I suspect you will have far greater movement to that sort of online execution over the Christmas period.
Bill, let's just talk about positioning here. As I read your notes this morning, overweight US equities, and you've actually added to your risk-on position. You're comfortable with current valuations, I assume, then?
Yeah, so we've always been long-term investors, and we've been looking at the secular and the thematic trends, which have served us really, really well through the sort of the COVID period, looking at the sort of pharmaceuticals and the digital and technology play. I think what we see now is as we go into the first and second quarter of next year, we're going to have a huge secular upswing. And this is being supported by all the policy, fiscal and monetary policy. And as we see that sort of convergence of those secular and secular trends, you're going to have a very strong impulse to risky assets in Q1 and Q2.